For chapter 9, issue of debentures, here we will be discussing interest on debentures. Now, we have already learned that debentures are acknowledgement of loan taken by the company, and they carry a fixed rate of interest which is payable periodically. Interest on debentures is charged on profits, that is, company has to pay interest on debenture even if it has not earned any profit. Okay, so I am discussing again. When the company issues debenture, it is under an obligation to pay interest at fixed percentage periodically until the debentures are repaid. Interest on debenture is charged against the profit of the company and must be paid whether the company has earned any profit or not. Now, journal entries relating to interest on debentures. When interest become due. Debenture interest account debit, expenses are debited to income tax payable, or you can write TDS, tax deducted at source, to debenture holders. Okay. Here, debenture interest account debit to tax deducted at source or income tax payable to debenture holders. Then, when the interest is paid, debenture holder account debit to bank. And since it is a charge, it will be transferred to profit and loss account. So, statement of profit and loss account debit to debenture interest. And when the tax deducted is paid to the government, income tax payable account debit to bank. These 4 entries are there. If the interest is payable periodically, some of these entries will be recorded twice. Let's understand this taking one illustration. Okay, 2000 debentures of rupees 100 is issued and the rate of interest is 10%. Okay, the interest on debentures is always prefixed to the name. Okay, and it is payable half yearly on 30th September and 31st March, and tax deducted at source is 10%. So, first entry, when interest becomes due for the first time on 30th September, debenture interest account debit 10,000, debenture holder to income tax payable. Okay, to debenture holder 9,000 rupees, to income tax payable 1,000 rupees. 10% of the total interest is payable as tax to the government. 6 months interest, okay, on 2 lakh at the rate of 10% for 6 months is 10,000 rupees. Income tax payable to bank when the tax deducted at source is paid to the government. Then debenture holder is paid the balance amount 9,000 after deduction of tax. Debenture holder to bank 9,000 rupees. Then again after 6 months interest becomes due. So debenture interest account debit 10,000, to debenture holder 9,000 rupees, to income tax payable 1,000 rupees. Now debenture holder is paid 9,000 rupees, debenture holder to bank, and then government is paid income tax payable to bank. At the end of the year, debenture interest will be closed and transferred to the statement of P&L. For that, the entry will be statement of P&L account debit to debenture interest 20,000 rupees. Total interest paid during the year will be transferred to the statement of P&L account. Clear? All of you? Interest is paid half yearly, so 2 times interest, debenture interest is debited and debenture holders is credited. Okay, like this one, this entry was paid past twice. Okay, then interest was paid and tax was paid. A closing entry statement of P&L is passed once only.